Good morning, everyone, and welcome to this morning's webinar. My name's Jackie, and today we're looking at corrections and their implications on the VAT return. So this is part of a series. We are running a correction series at the moment. It will continue next week. We'll be looking at correcting invoices, orders, also looking at correcting bank transactions, and later on we'll be looking at bank reconciliation and the impact on bank reconciliation as well. So there's quite a few in this series. So if you haven't already and you're interested in those sessions, do get yourself registered because a lot of it will follow on from what we're covering today. So first of all, we'll just go through some housekeeping for today's session. So you will notice your microphone is on mute. That just means you can't speak to us directly today, but if you do have any questions, please do send them across to us using the questions panel. The questions panel can be accessed using the icon that looks like a speech bubble with the question mark in the middle, and that will allow you to send your questions across to us. We've got Abby on hand in the background for any questions you may have, and if possible, I'll try and do a demonstration as well. We also have a handout for today's session, so if you do want to take a copy of that handout, again, it's the icon that looks like a document with a folded corner, and that will allow you to take a copy of today's slides. After today's session, you will receive a follow-up email, and that will have links to our future webinars, so the ones I've mentioned, but we do have lots of other content available as well. So if you want to register, you'll have a link in your follow-up email and also links to recordings of other webinars as well. So quite a lot of our webinars do tie in nicely to other webinars, so it's often quite handy to follow up on those afterwards. So today we're going to be looking at, first of all, editing a transaction and the impact, then deleting transactions, and then we're going to go through some VAT journals and some manual adjustments at the end. And again, if we've got any time for questions at the end, we'll try and do a demonstration where possible. Okay, so we're going to jump into editing a transaction, and the first thing I do just want to highlight is if you haven't done a VAT return or you're not familiar with the process or you just want to gain a bit more confidence, we are doing VAT sessions next week, which is the whole how to run a VAT return. So today I will do a very quick run through of calculating a return. Next week's session is a dedicated session on that. So if you are not familiar, again, check that link out for next week. Okay, so first of all, editing transactions. Okay, now this is something that can be done easily in the software now. It's far easier if you're on standard VAT to do corrections without actually having to do them manually. In the past on older versions, we did rely a lot on doing manual corrections. But there are some things to take into consideration if you're going to edit transactions, because that will depend on what occurs on the back of that correction. So the two things we're looking at is critical and non-critical fields. So critical fields are fields that where you make an amendment to that transaction, if you amend those fields, what will have to happen is the original transaction will be cancelled and a brand new one posted. So bear that in mind. If you've reconciled a transaction and then you go to edit it, you're going to find you have a new transaction appear. And that is things like the customer account reference, so if you've popped it onto the wrong customer or supplier, the wrong nominal code, bank account, if you've changed the date, or the net/VAT amount on the transaction, or the tax code, because that can change how the sort of net tax split works out. So if you make amendments to those ones, the original will be cancelled and a brand new one will posted, and that's regardless of whether you've reconciled or not. Non-critical fields are fields we can just make an amendment to, and it won't actually repost any transactions or have any impact on the VAT return. So things like the reference, the transaction details, the department, the payment reference, so whether it's flagged as paid or not, and the bank reconciliation flag. So what you might find is you start to see transactions with reference to deleted or cancelled and see transaction number. So there is a link on the handout there if you want to take a copy of the handout where you can link into an article that explains each of those, but we're going to have a look at that in our demonstration in just a moment. So on today's session, what we are going to do is we're going to sort of compare non-reconciled to those that are reconciled. So we're first going to look at some transactions that have not been reconciled for VAT. If we amend them, what happens to those transactions? So we're going to also look at critical and non-critical fields again, so you can understand what's going to happen as a result of these changes. Okay, so the first one we're going to do, I'm going to do two demonstrations here before popping back to the slides, is some amendments to transactions that are not VAT reconciled. So in here I have my data set, I'm in transactions, and I've got a few transactions in here that we're going to work with today. So it's key to note what we're covering just now is only applicable to standard VAT. I'm going to show you the difference in VAT cash accounting a little bit later on. Okay, so if it's not reconciled, it doesn't matter at the moment whether it's VAT cash or standard accounting that you're doing. It's only once they're reconciled that the differences will occur, and it tends to be on your invoices rather than your bank receipts and payments. So the first couple of examples here will actually apply to both. So I've got a bank receipt here first, okay, and we're going to make a change to this one. As you can see, it's not reconciled, and the way to check that is to go into these columns here, which is VAT, and it's got N, so it's not reconciled, and it doesn't have a VAT return number, and there's no VAT reconciliation date. So I know that this isn't going to have any impact on VAT at the moment. I'm going to amend this transaction. So to edit or delete or make any amendments, we've got the options at the top here. So I'm going to use the edit feature, and to show you the difference between critical and non-critical, I'm going to start off with a non-critical field. So this original posting is a bank receipt. It's posted to Department 0. So all I'm going to do is change that department over to a different department. So as you can see, on the window that has appeared in the middle of the screen here, we don't have anywhere to amend the department. So I do need to go into edit again. And within here, it just opens up a slightly different window, which just goes over the top normally. We've got the drop down for departments. So I'm going to change that to Department 5, for example. Okay, so I'm just going to close on there, and on the next one I need to save. So I get the message, do I want to post the changes? So I'm going to say yes to that. And what you should notice there is we don't have any additional transactions to where we started at the beginning of today's session, but we do have Department 5 now showing on that transaction. So it has changed that without any further implications. Now let's just compare that to transaction 2. Now again, this is not VAT reconciled, but let's change the date on this one. So this is a critical field we're going to be changing. So I'm going to edit again. And again, on this window here, you can see that I can change the date on the screen. So I don't need to go further into it. I can make the change from here. So I'm just going to change it from yesterday's date to today's date. So it's a simple mistake, easily done. And again, I'm going to click on save. Okay, do we want to post the changes? So yes, we do. And again, what we'll see is there has been some change in this case. So the original transaction, transaction 2, still remains there. If I take the highlight off it, you can see it's not in red. So that shows it's a live transaction. But if we have a look at the date, it now has that new date on it. So the original transaction has actually been updated with the correct details, or what I've amended it to. And further down at the bottom, we've got this new transaction which says cancel, see transaction 2. So it's recognizing it was a correction. So it's also pointing me back to the original transaction. So I can see not only was this a result of a cancelled transaction, I know exactly where that cancellation was made. So I could compare the two. If I was trying to work out what did I change, I can compare the two, and it is the date that's changed there. What's also great is with the corrections now is you can see who made that edit. So you can see the edited by column has manager. So I'm logged in as manager. It was me that made the change, but also when that was made. So if you are trying to retrace what was going on, why was that corrected, that might give you a bit of a clue as to what was going on that date. So that's non-reconciled. Okay, so what I want to move on to next is actually what we do when it's VAT reconciled and how that differs again. So if you're going to edit a non-critical field, like we did previously, again, it didn't make any changes. So actually amending a non-critical field will have no impact on the VAT return because it just makes the change to the transaction. If you do edit a critical field, however, what will happen is the transaction will need to be reversed. Okay, so it will reverse that transaction out. What it will then do is it will post a new transaction with the details, the posting details on there for you. So what we'll find is when we edit one transaction, we end up with two new transactions, a reversal of the original, and then a brand new transaction with the correct details on. So let's have a look at that live again. We'll pop back to the data there. So I've got bank receipt 3, this one here, and as you can see, this one has been reconciled. It's got the R flag in VAT. It's part of VAT return number 1, so I can retrace it if I need to. And it was VAT reconciled at the end of October. So this is now reconciled. Now, if I was to delete, what would happen is I would just get the reversal. Okay, so if I highlighted this one and click delete, what I would get is I'd get a bank payment. If we edit, however, I'm going to edit that now, and I change a critical field. I'll change that to today's date, for example, and save. Just say yes to that. What we now have is bank receipt number 3 is there. It's still showing as a live transaction, but it does have the word cancel in there. Okay, so it means it has been reversed, but it's not really termed a deleted transaction. So it'll still show up on deleted transaction reports. But what we also have is 2 new transactions. So we have transaction 8, which is a bank payment, which is the exact opposite of a bank receipt. It's got all of the same posting details. So it's got the original date on there, and it's got cancel C transaction 3. So this is the reversal of that bank receipt that we originally had. So that effectively cancels the impact of that original invoice off that VAT return. What we then have is a brand new transaction, which is transaction 9, which is a bank receipt again, and the only thing that's changed is the date on there. So it's a brand new transaction with that brand new date there. Now what happens next is we've got 2 new transactions for October, but we've completed our VAT return for October. So these will actually be picked up on the next VAT return, these 2 here. So we need to include those because we've told HMRC that we've paid VAT on that particular transaction, but the date was incorrect. So we need to now report that. And the way to do that is on the next VAT return. So I'm going to pop into my VAT return window. And as you can see, there's my previous return. So we're going to do our November return. So I'm going to go into VAT return. I'm just going to do it for November. Obviously, if you're not in a rush like me, just to try and make sure we get this done as smoothly as possible, always take a backup. But I'm just going to calculate it for November. So I'm going to click on calculate. And what that does is it looks at the date range you've specified. So I've said look between November, the beginning of November and the end of November, and pull through all transactions that meet that criteria. But what it also does is it goes back prior to November for anything that's unreconciled that should be reconciled. And what it's done is it's picked up 2 transactions here as earlier unreconciled transactions. So any amendments or cancellations, deletions that you make that impact the VAT return, if a transaction results from that, you will find them in here. So you can see I've got my 2 transactions there, and what I need to do is include them in the return. Now, if you did have a rather extensive list here, unlike myself, then you would need to work through those and make sure that they are all genuine either corrections or late entries. Okay, you shouldn't really have anything else sitting in this window. The reason you need to check is because the options to include or ignore are all or nothing. Okay, so if I selected include on a long list, it will take all of them. I can't just highlight which ones I want to include. So if you've got any sitting in this window that shouldn't be, you may need to investigate that and see what you can do to get them out of this window. Okay, it might be they've been posted with incorrect details, incorrect dates, and see if you can get those moved out. If I ignore, it's exactly the same. It'll ignore all, but the problem is they'll come back next month. So although you're ignoring them, you're kind of doing a bit of a snowball effect with these transactions. So I'm going to include these and they will go in my November return. With this being a correction though, so all we did was amend the date, we've got both a bank receipt and a bank payment. So they're actually effectively going to cancel each other out on this return. So the values are reported in my box 1 and 4 figures for the VAT element, as we'll see here. Let's see if I can find the transaction there. So they are reported. I've gone into the wrong one, apologies. It's in receipts, bank receipts. Bring this across. So there you go, you can see the figure is reported on. However, it's also reported on in box 4. So the overall impact on box 5 is nil, but it is correcting the boxes on the return. So it's also my bank payments as well. Sorry, my windows are all over the place this morning. So you can see that's there. So no overall impact to the VAT return, but they are being pulled through and they're going to be marked as reconciled so that they don't get picked up again when we come to do the December return. So the key is when you make your correction, make sure that when you're doing your VAT return, you're checking those corrections are pulling through, even though they're not impacting your overall figure. Now I'm going to close out of the return because I'm not going to be doing any reconciliations there just yet. And what we're going to do next is we're going to look at some different transaction types. So that was all about amending transactions. So I'm going to move on to my transactions list, and this time we're going to be looking at sales invoices. So this is where it does differ if you're on VAT cash accounting, and I will show you a quick demo of that in just a moment. So with standard VAT, it is the invoice that gets picked up by the return. So it doesn't matter if that invoice is paid or not. So again, I just want to show you what happens on a slightly different transaction type, but this time we're going to delete these transactions. So here I've got a sales invoice and we've got all the details there, and if we look along, this one is not VAT reconciled. Okay, so it's not impacting my VAT return at all. It will, however, be picked up in November. So if we can correct it before the November return, it won't have any impact. So I'm going to go to delete this one. So it's not reconciled, pop into delete, and I'm going to go to delete at the bottom here. So remove the transaction, and the wording here is, do you wish to delete the transaction? So I'm going to say yes to that. And all that does is it deletes the transaction. Okay, so we've got in the details, deleted SI. If I move my highlight off it, you can see it's now marked as deleted because it's in red. And that's it. It's basically removed from my ledgers. Okay, so it's not going to be picked up on the VAT return because it's not now a live transaction. So that's why it's different to these reversals. This one is no longer live. Anything in black is a live transaction, even though it's been cancelled. So deleting is nice and easy if it's not VAT reconciled. So let's have a look at what happens if it is reconciled. So if it is reconciled, I'm just going to pop back to the slide for just 1 second. So if we delete a VAT reconciled transaction, what it will need to do is it can't just delete the transaction because that's been reported on a VAT return, is it will need to reverse the transaction. Okay, so what we will find is we'll find the opposite transaction type. So if it was a bank receipt, we'd find we had a bank payment appear like we did earlier. In this case, it's a sales invoice. So what we're going to see is a sales credit note. Okay, back to the demo. So I'm going to delete this one here. As you can see, this was also included in the October return. So if I go to delete and select delete again, this time the wording is different, so it indicates it needs to reverse. So we need to say yes. And then what we'll find is our original transaction 5 is still live, still there, but we now have the reversal. So we have a sales credit note posted to that customer with the details of cancel, see transaction 5 in there. So again, easy to find what the original transaction was, and the software's done the work for us. We don't need to create that manual credit. The software's taking care of that. So again, what we need to do is make sure that that's in the November return. So when we go back to do our November return again this time we have the 3 correction transactions. Now, because this is a deletion, we haven't replaced it with anything, this will impact the return. So we'll have £70 VAT showing, deducted from box 1, and we'll have £350 in the net box. So I'll include those just to show you where they appear. If I go into the drill down feature here, we can see the sales credits are showing there. Again, just to go right down to the transactional level, you can see it's pulling through that October transaction. So the key really is to make sure that you're looking at those earlier unreconciled transactions and that you're happy that they are all corrections or late entries. Okay, so I did mention about VAT cash accounting and how that's slightly different. So I'm just going to go on to my VAT cash accounting company and won't spend too long on this because we don't have a huge amount of customers on it, but it is good to understand the difference there. So with VAT cash accounting, it is the sales receipt that is picked up on the VAT return, not the invoice. Okay, so you can see here I have a transaction 3 which is reconciled. Okay, now if I go to amend the invoice that is paying off and try to edit that, and say for example try and edit the date and save, what we get is a few messages that make us think it's going to do it, but then we'll get the message to say that the transaction has been allocated against a receipt and the VAT is calculated, therefore the change can't be allowed. So basically, because of the way it calculates the VAT cash accounting can't do corrections once the transactions have been allocated together. So what you will find in that situation is that you do then need to start looking at doing manual reversals. So doing the opposite transaction in that case. So again, if I try to delete the invoice, we'd get the same message there as well. So it won't allow us to do that. Okay, and if we just try to delete one that hasn't been reconciled, we're in the same position. Okay, so we can't do it while it's allocated against that receipt. So that's just a little bit on VAT cash accounting there. Okay, I'm going to just pop back to the slides. and I just want to talk about VAT journals. Now, do not panic if this is not something you've come across before and it's not something you're considering doing, because it's not commonplace, okay? So it's not something everyone does. Had a few people sort of panicking, well, I've never done this before. You may be in a position where you don't, okay? But sometimes you may find yourself in a position where you need to post a journal to impact your VAT return. And that could be on the advice of your accountant or HMRC, or it might be something you're familiar with doing. So journals can impact the VAT return. I'd say 9 times out of 10 they don't, because you normally post them on a T9 tax code, which means they're outside the scope. But you can post them to impact the VAT return by using a VATable tax code. So for example, a T1. Now, if that journal is posted against the purchase tax or sales tax control account, it will be recognised as a VAT value. If you use any other nominal code, so for example, 4,000, then that would be seen as a net value. So what you not often find is if you're posting a journal that is maybe posting some sales, you might have 2 elements. You might have a net element going to 4,000 and the VAT element going to 2201 or 2202. So like I said, it's not commonplace, and you might never find yourself in that position, but I do want to show you a real life example of when we would suggest you use a journal on your VAT return. So to do that, I just want to talk you through the sale of an asset, okay? So if you were to come to us, to our support team, and say, I've sold an asset, so I've sold, say, a car, I need to record that in my accounts, we would suggest a journal that looks a little bit like this. Now, this has been taken from the article, okay? So with this, we have sort of 7 arms to the journal, or 7 parts of that journal. Okay, the key thing to note is most of these elements of the journal won't be picked up on the return. Only 2 of them will be, and that's these 2 at the bottom because they're on a T1. So everything else essentially in this demonstration here, we can ignore. I always lose that box on this slide. So we can essentially ignore everything else because that's not really important to the point we're trying to get across here now. But as part of this journal, we're recording the sale of that asset and the VAT on that sale. So we've recorded that by posting one journal as a credit to 4,200 for the net element and using a T1, and the VAT element we've posted to 2200 using a T1 again. So these 2 transactions will be picked up on the VAT return. Nothing else will, but these 2 will, because we're recording that sale. I'll just show you this in action. Like I say, if you don't feel you're ever going to use this one, please do hang on, because we've got a few other things that will be useful for you. So I'm just going to go back into my VAT corrections data set. I'm not going to save that one there. I'm going to pop into nominal codes and into journal entry. Now I have, if this has gone smoothly, I have memorized this, so I'm hoping it's going to recall. This is where I realize I've maybe restored a backup. I think I've got it there. Yeah. Okay, so I pre-prepared this yesterday. So as you can see, the journal that we've got in the handout is on here. Now, at the moment, there's one change I need to make sure it's only picking up those sales transactions. So I need to make sure these last 2 are a T1. There we go. Okay, so we know that the net element there and our VAT element is going through to 2202. So I'm going to save that with today's date, and I'm going to calculate the return again, just so you can see how that's worked. Calculate for November. I'll ignore those for a moment just so we don't have too many transactions to sift through. But if you look at my box 1 figure, using the drill down feature, now you can see, now we've given the correct treatment to them of putting them on a T1, the journal credit is picking up in box 1, so it's impacting my sales box 1, and the net element is showing in my box 6. So again, I'll just pick that up there. So this leads nicely on to the next sort of topic there. But like I say, VAT journals, they may not be something you have to do, so please do not panic if you've not found yourself in that position. And we do recommend, if you think you need to do them, to speak maybe with your accountant first of all. So first of all, what I want to point out is a really common question that we get. And I'm just checking we've got a slide on this one. No, we don't have a slide on this one. Okay, so what will happen is journal credits only ever get picked up in box 1. Okay, so if you were trying to post a journal credit to your purchase tax control account rather than your sales tax control account, what customers often think is that's going to impact box 4 instead for purchases. Okay, so we quite often get the call of, I've posted a journal credit, I've posted it to purchase tax control account, but it's actually impacting my sales. So what you can't do is you can't reduce a box value using a journal. Okay, you can do sales credits, purchase credits, but journals can't be used to decrease the value of a box. Okay, so if you were to post a journal credit to your purchase tax control account, rather than it be picked up in box 4, it will just increase box 1 to almost counteract the impact of the other box. So it's a tricky one to get your head around, but I think the key thing to sort of remember is the VAT return itself. If we go back into here, box 1 can only ever pick up a journal credit. So even if you did a journal debit to your sales tax control account, it will pick up in box 4 because box 4 is designed to pick up your journal debits. So rather than decrease box 1, it will increase box 4. So the overall net effect will be correct. So that's just one to note. It's a really common question into technical support. Okay, so I'm going to move on to manual adjustments now. Okay, so this is sort of the final topic there. So if you do have any questions, now's the opportunity to get them across to us. Manual adjustments are far simpler than posting journals to impact your VAT return, but they are there for a reason, and it's not to correct for a transaction that you've maybe forgotten to post. So normally it's because you've been asked to adjust something on your VAT return, maybe by your accountant, maybe by HMRC, or you're on a specialist VAT scheme which requires manual adjustments to be posted. So a good example of that is partial exemption. Okay, that's probably the most common one we come across. So the adjustments feature will make an adjustment to your VAT return, but what will happen is when you reconcile the return is you will get a manual adjustment journal. Okay, and that's what many people don't realize until after they've clicked on reconcile. Now, it is key to note that if you do have a VAT adjustment to post, you need to make sure that you change your software date to the final date of that period, because it will post with the date that you're sort of running the VAT return, which won't be correct. So I'll show that in action. We'll go back into our VAT return. To change it, you would go into settings, change program date, and change it back to the last date. So if we were making an adjustment for the end of November, we need to make sure that we've got the 30th of November in our program. So through settings and change program date. Otherwise, my journal would post with my posting date at the moment. Okay, so the make adjustments feature is in step 2. So it's after we've clicked calculate. It's once we've got the VAT return figures like we have here, we've got the option to make adjustments. So if I click on make adjustments and bring this across, you can see which boxes we can edit. Okay, we've got a few boxes that can be edited. 2 of them can't because they are calculation boxes. So they are based on the figures from other boxes. So for example, I've been asked by HMRC to make an adjustment of £100 to box 1 for my next return. I can click on the box there, the little icon. Put this across as well. And I would pop in a reason, so I'm just going to say HMRC advice. And I'm just going to pop in a value of, say, 100. And you can make it a negative adjustment by just popping in the negative sign. Okay, so I could just put in the negative sign if I wanted to. Okay, so I've popped in the adjustment and I click save here. And at the moment it hasn't actually posted anything, but it has made the amendment to my figures. So you can see the calculated value, and then we've got the reported value now based on that adjustment. So I'm going to close out of there. And now I've got the new inflated figure to include that adjustment. That won't save until I reconcile. So if I come out of the return and go back in, that adjustment won't be there again because we'll be starting afresh. So it's only once I click on reconcile. So only once you're happy with your figures, do you click on reconcile, and that will set everything in stone. Now I get this message that says I've made an adjustment, but I haven't attached any supporting documentation. So you do have the option within here to add an attachment. So if you've got that letter from HMRC or you've got the guidance from your accountant, you can add a copy into the VAT return. And that just means if you're ever audited in, say, 4 or 5 years' time, are you going to remember why you made that adjustment? Possibly not. If you're queried on it, I've got an attachment right here which explains it all. So that's quite a useful feature, but you can add that later. So you might know I've got it in an email. I'll go and save it later, but for now I just want to do my VAT return. So I'm going to say no to that. And then we need to flag everything as reconciled. So I'm going to say yes to that. So I'm going to close out of this because you can come back to these steps later on, and you can add an attachment at a later point, as you can see there. So I'm going to go into my transactions. And I'm just going to show you in here the adjustments that have appeared. So we've got the adjustments there, and we've got the two adjustments between the VAT liability and also the manual adjustment nominal code, which is 2204. So this ties in nicely to the question that came through. What happens if you don't adjust the date for the manual adjustment? So sorry, you need to change the date. If you know that the manual adjustment was made for a different date, what it will do is it'll post with the last date of the month. So if that manual adjustment is for a different date, and I do apologise, I think I've gone down the wrong track there. Actually the posting, what I've got wrong there, bear with me 1 second. I've gone down the wrong track, I do apologise. Yep, so it's if you want to post the adjustment for a different date, that's when you would change your date in your software there. So if you want the posted date to be a different date, you need to change the date in your software. So we'll still post the adjustment for you and it will still go on the return. It's just if you want the posted date to show as a different date. Okay, but the date is on here is showing at the end of the month. Okay, so it's just if you want that posted date here, which isn't the date of the transaction, it's the posted date. That's what you need to change the software date for. Typically, you would leave it as the end of the month, so you might just want to change that back so it matches the same date. So I hope that answers that question there. Sorry, I went down the sort of wrong path there. It's the posted date, not the actual date. But yes, we've got the two adjustment journals there between the VAT liability and the manual adjustments nominal code, which have posted automatically when we clicked on the reconcile option there. Okay, I'm going to go back to the slides there. Okay. So this just goes through the manual adjustments, and I'm just going to pop onto a summary now. So again, if you've got any final questions, please do get them across to us there. So first of all, if you're on standard VAT, when corrections are made, those reversals are posted automatically and they will be pulled through onto the next VAT return. With VAT cash accounting, manual reversals will be needed because of the way that the software works when it's calculating the VAT on invoices and on the payments. Remember, those reversals and any corrected transactions should always be picked up as earlier unreconciled transactions so that you can pull those figures onto the next VAT return. Journals can impact the VAT return, okay? But you do need to make sure that you're using the right tax code, the right nominal code, and also that they've got a VATable tax code on them, so it's not using a T9. So they can be used for that. And just bear in mind, if you're using a net element, you can't use the sales or purchase tax control account, but you must use them if it's a VAT value. And manual adjustments can be made direct to the VAT return, okay? And these result in adjustment journals being posted, as we've just seen there. Okay, so this is your opportunity for questions there. While we're just waiting for any final questions, what I'm going to do is just go into our help centre, because there's lots of more help available on our help centre. In particular, we have a VAT section, and in here you can delve into whether it's Republic of Ireland or Great Britain, and within here there's lots of help available on setting up, submitting the return, tax codes to use if you're having issues with your VAT return. In addition, in the Help Centre, if you go to sage.co.uk/webinars, in here you can see all of our recorded sessions, so they're all available here, but we've also got our live sessions. So you can see at the top we've got our correction series still to come. We've got invoices and orders, stock, bank rec and transactions, so lots still to come. But in addition, we've got our VAT sessions next week. So we're starting on Tuesday. We break it into 3 because there's quite a lot to cover. So we've got Tuesday, Wednesday and Thursday next week for VAT returns. So get yourself registered for those if you want a bit more about the ins and outs of the VAT return. We continue into December, so we've still got lots going on right up to December. So we're covering things like bank feeds, and also year end is a really common topic around Christmas time, as lots of people do their year end at the end of December. So no harm in getting yourself ahead if you're going to be year ending in January. Okay, so that brings us to the end of the session there. Very quiet on the questions today. So if you do have any questions, we'll just give you a few more moments just in case you're frantically typing out a question. But if you are leaving this session, thank you very much for joining us. If not, then we hope to see you on another session soon, but we'll pop back before we end the session. So we'll just pop on mute for a moment or two there. Okay, I think we'll look to end the session there. So thank you very much for joining us. And like I said, we hope we'll see you on another session very soon. Take care for now.